Hello, hello, everyone. How's it going?
What's
We
up?
are live with Andre from Edgeful.
How are
How's
you?
it going?
Good, good. Thanks for having me. I'm super excited.
Yeah, I'm also super excited for the algo. I've personally been
Yeah,
using it for almost since it's been out, and I think it's amazing. It's my first venture into automated trading, and I
yeah,
love how easy it was, and especially how step by step it was to get started. So,
yeah. It's one of the things that we really wanted to do when we had these algos was number one, we always wanted to make sure that like we're not coming across and like saying that we've discovered some holy grail. There is no such thing as a holy grail for anyone listening. There's no such thing as a holy grail. But what we did want to do was give you a data-backed foundation from what we've seen in the Edgeful reports and in the Edgeful like ecosystem, and then give you guys the ability to automate a strategy around it. So, just for some context, right now Edgeful has four different algos: one for the gap fill, for the IB, for the orb, and for the engulfing candles. And just to keep it super high level, just in this intro, they're all customizable to you and your risk tolerance, how aggressive you want to be, the type of risk to reward you want, the type of win rate you want. So like everything is customizable. So it's very curated towards
mhm.
how you guys like to trade. Because at the end of the day, everyone has a different trading personality, and that's going to dictate like what the types of trades you're willing to take are. But we'll get into that in a second.
Yeah, just real quick, I just want to say how customizable these
Yeah.
risk settings are. Like, for example, you could select not to take shorts on Tuesdays, and
Yeah.
that's a setting that I have. I don't take shorts on Tuesdays because
Same.
of the back. Oh, you don't either?
Yeah, I'm
That's
going to
funny.
show actually some of these things on this call, but on this
Right.
stream. But yeah, by the way, if I'm looking over here, just so everyone knows, I'm not like looking away. Like I have myself and Raj here, and then I have like my screen recording up here, so that's why I keep turning. But yeah, I'm actually going to show really briefly like the types of customizations that you can make.
Mhm.
Or obviously, like you guys can decide whatever you want, but pretty much the way that these work is that they're trading view strategies. So the way that they work is that they're going to plot exactly for you when to enter, when to stop out, when to take profit. Everything is going to be done for you. And you have the choice to automate it through ProjectX or through Tradeovate or NinjaTrader. So whether you trade with a prop firm, whether you trade with your like personal cash account, like you don't use a prop firm, you're going to be able to use these, and you don't have to automate them if you don't want to, but you can. I always recommend paper trading with them first, just to kind of get comfortable with it, because the shift from discretionary trading to like watching a position open on your chart is a little bit honestly it is a little bit weird in the beginning. So I do recommend in the beginning at least paper trading, so you can kind of get a feel for it. But what I want to do here is show you guys kind of like what is the orb strategy, what does the backtest look like, how does everything work, and I'll go through changing some of the settings and how I think about changing some of the settings. One thing is that I'm just going to open up Edgeful here quickly. One thing is you go to the algos page. This is where you're going to find the algos. So it's edgeful.com/algos. That's going to be right over here. So you click on this, and then once you upgrade, like once you go through and get the algos, you're going to see these explainer videos. So there's a few right here, but the really important one that you want to make sure you watch is this one right over here, the Orb Algo Explainer. And this is going to cover everything that you need to know, right? How the customizations work, what the actual strategy is. So there's no like black box. Like it's not this, there'll never be a signal that appears on your chart that you don't know why it's there. You will always know why these signals are appearing. It's not some mystery like black box strategy. You need to understand how they work. We're not trying to hide anything from you. So make sure to watch these videos. They're absolutely crucial. And start with the orb. Don't look at the rest. Start with the orb because it's the most consistent. And one thing that I'm actually going to pull up here is, just give me a second, is this chart. So hopefully you guys have seen me talk about this. And I'm going to make this pretty big now so I can explain. This applies to algos. This applies to your trading in general. This is extremely important. You hear traders say, trade a 2-to-1 risk to reward strategy with a 50% win rate. It's profitable. You'll be great. Your winners are twice the size of your losers. That's true. However, what this chart shows is the probability of taking a certain amount of consecutive losing trades based on your win rate, right? So you can see right here, these are all the different win rates, and then these are the number of consecutive losers. So what you're going to see is 50% win rate right over here. So when everyone says 50% win rate, 2-to-1 risk to reward, you're going to see right over here, 50% win rate. But what you'll notice here is that there's an 80% chance that you take 6 consecutive losing trades. So everything is still going along to your strategy, but 6 consecutive losing trades, almost all traders are going to be like, you know what? The strategy doesn't work anymore. The market environment has shifted, when in reality, it's perfectly along the strategy. There's almost an 80% chance you take 6 losers in a row. There's a 50% chance you take 7 losers in a row. So you guys need to understand that if you're like emotionally, if you're not okay with taking a bunch of consecutive losers, which is fine, I'm not, you want to be a little bit lower on this chart, right? You want to have a higher win rate. So if you go to a 70% win rate, what you're going to see is that there is a 55% chance that you take 4 consecutive losers, which is still going to suck, but it's not nearly as bad as 7, like what you can see here, right? There's only a 21% chance that you take 5 consecutive losers. So this is great. You get more consistent strategy. Your equity curve is a lot smoother. You're not dealing with a lot of like ups and downs, right? So when you hear people talk about these 2R, 3R, 4R strategies, you need to understand how many expected consecutive losers are you willing to take. Now, there's another extremely important piece to this. If you want a 3R, right here is 3R. So you can see that right over here, 2.99, it's 3R. If you are trading a 3R strategy with a 30, 40% win rate, and every single time you take the trade, you take your profits here, you are not trading a 3R, you are trading a 0.8R. You guys need to understand that when you trade a strategy that has a 2 or 3R or 4R risk to reward, that means that you need to hold your entire position to the initial target. That means that you do not take trims. This is part of the strategy. Unless the strategy says to trim along the way, you cannot trim along the way. And if you do, that means that you're trading a 1-to-1 with a 30% win rate, which is not profitable, which is probably realistically the reason that most of you don't make money consistently over time, is because you cannot hold on to your winners for a larger move, which is fine. What that means is pull in your profit targets and actually hold to your profit targets. And when you get used to trading a 1-to-1, then go up to a 1.5-to-1, then go up to a 2-to-1. Personally, I don't really have a desire to go to a 2-to-1. I just don't think it's necessary. I like my 70% win rate with my 1-to-1, roughly 0.8 to 1-to-1. That's where I like to live. And yeah, so this is really important for you guys to understand when it comes to your strategies. Does that make sense, by the way, what I just said? I know that was kind of like a pretty hot intro, but I just want to make sure that makes sense.
Yeah, totally makes sense how taking your trade-off early completely changes the risk dynamic. And it's something that it's hard to track both mentally and through software. Some traders might be journaling that, but unless you write down and tag it that, oh, I took this off early, you're not going to be able to see, what you're really missing. And as you know, data is super, super important. That's how you improve.
Yeah. And that's part of the entire platform of Edgeful. So like this stream is going to be focused on the algos, but the entire purpose of Edgeful is to give traders that data that they would otherwise never have access to. So for example, very quick overview of what Edgeful actually does. Right now we're looking at NQ, the initial balance report. And what you can see is that over the last 6 months, 72% of the time, price has only broken one side of the initial balance. So what that means for you is that that is your bias. Your bias should be to continue to the downside because it's very unlikely that the top side is also going to break. That has only happened 24% of the time in the last 6 months. So this is the type of thing that Edgeful has. Every single day or every single week, we add more to it. But I want to talk about the algos now, specifically the orb algo. It is definitely the most popular one. And I just want to show you guys quickly the back test on it. So this is year to date on NQ on the 5-minute chart. And so you can see January 1 to October 7. What I'm looking at here, and the only thing is the default settings have a $100 max loss. If you're trading the micros or MNQ, the default settings would be for that. But now I'm looking at NQ or the minis, so I'm going to put it to 1,000. So the micros or the minis are 10x the micros, so that's why I just 10x'd it. It doesn't mean that this is the most optimal max loss. It just means that this is going to give you some room to breathe, right? If you're trading NQ with a like 5-point or 10-point stop, honestly, good luck. But it's not really realistic, to be honest. Size down, widen your stops, makes it a lot better. But I want to touch on kind of explaining the back test before we go into the actual strategy itself. But this is on a $10,000 account, trading just one mini. So this assumes one mini throughout the entire year. You can see that it's returned almost $6,500 or $16,500 or 164%. The drawdown is 19% or almost 20%. It took 126 trades, 65, almost 66% win rate, and a 1.4 profit factor. So these are the default settings. So I didn't change anything over here. I haven't touched any of that yet. We're going to go through kind of like, I'm going to explain to you how I do it. And one thing that I just want to mention is that I really highly recommend looking at this list of trades here. So right here, if we look, we have the list of every single trade with the entry, time, the entry exit, or the date, the time of the entry and the exit, the price at which you entered and exited, the P&L, the run-up, the drawdown, literally like anything and everything that you could possibly need to have confidence in a trading strategy is going to be here. We literally have everything that you could possibly need here. We have the overview with the returns, with the drawdown, with the number of trades, the win rate, the profit factor. And on every single day, it doesn't go back. This is like a trading view thing. It doesn't go back all the way, but you can see every single trade that it took. So here's an example. You can see it entered right here. The stop loss was this red line right over here, and the profit was over here. This day happened to be a winner. But you can see it shows you everything. It's fully transparent. And the explainer videos on Edgeful will actually go through exactly how each of the settings work. It's like, I think it's like a 15-minute video. Honestly, it's like not that complicated. But what I want to do now is show you guys some of these settings. Does that make sense, by the way? Does anyone have any questions about anything I've said so far? Is that...
There was one question.
Perfect. Let's do it.
Someone said 6 losses for 1 to 2.
Let me open that back up. What was that? What was the question?
He asked, are there 6 losses in a row for a 1 to 2? Risk to reward?
Well, the risk to reward is not... It's the win rate that matters more. Mm-hmm. The win rate is what this thing shows you. So if you can see here for 6 losses, here, let me just do this. So 6 consecutive losers, you want to be looking here. So pretty much if you have a 40% win rate, there's 100%, practically 100% chance you take 6 consecutive losers. 45 is 93. A 50% win rate, there's an 80% chance you take 6 consecutive losers. And then really it starts to... What was that?
I said that's crazy that traders don't really understand that. And when you're trading manually, you kind of forget it until you kind of zoom out and look at the data that, oh, this is normal, you know?
Yeah. And here, I'll pull this up quick. Let me just do this just so it's a little bit easier to see. But you look here, this is the one you want to look at. So almost an 80% chance that you take 6 losers. Guys, I'm sure that we've all taken 6 losers in a row, but if you think about that, you're going to deviate from your strategy. Like if you take 6 or 7 or 8 consecutive losing trades, there is just realistically I'm going to speak for 95% of people. There's no way that you're going to trade your strategy consistently after taking 6 or 7 losers in a row. So the solution is not to have a lower win, is to like set your targets even further. It's actually to pull in your profit targets and start to get somewhere where the odds of taking all these consecutive losers starts to like really, really plummet.
Mm-hmm.
So even at 75%, you're looking at 2%. There's only a 2% chance, 7% chance at 70%. This is really, really important for people to know. Does that answer the question?
There's a follow-up here.
Perfect.
He asked, when you said, or what you said was about increasing from 1-to-1 to 1.5. Really nice idea. No need to go to 1-to-2 right away.
Yeah. I mean, guys, like this, if there was a couple of things that I could change about the way that the trading industry worked, like the education around the trading industry worked, would be, number one, there's no get rich quick, there's no holy grail. So that's number one. Let's put that aside. But number two is this idea that you need to make twice as much, like have a 2-to-1 risk reward, or 3-to-1, 4-to-1. These people are saying like 2, 3, 4, 5R. Like, to think about the idea of a beginner trader even holding to a 5R is so honestly just unrealistic and like setting them up for failure.
Yeah.
Like holding to a 5R is something that you develop over years. Like when you have, let's just look at today, for example. If you wanted to hold to a 5R, like wow, you're holding for a 200-point move in this case. Like there is no trader that's going to consistently hold for these larger moves. It doesn't necessarily mean it always has to be 200 points, but like for the most part, you're looking at like over 100 points if you're risking like 20 points on a stop, which in my opinion is a little bit too conservative. But during this pop, let's just go to a 1-minute chart here for a second. That means that you're not stopping yourself out. You're not taking profits early when this happens. And if you do stop yourself out here, you're like, oh, green trade, we did it. Like it's a green day. Green day is a green day. Making money is making money, right? No, because your strategy only works if you hold to your 5R target, which means that you need to be able to accept sitting in these pullbacks of, in this case, was 70 points. I don't even want to target 70 points for myself on NQ on a, like, if I'm long or short. For me personally, it's too much. But you need to sit in 70 points of like a pullback, just hoping that it's going to continue in your favor. So the solution to that, again, is pull in your profit targets. Give yourself a goal of holding your trade to your target at a 1-to-1 for a month. Then bump it up 1.2. Do it for another month. Hold your target. And whether it's a stop or a target doesn't matter. Then 1.5, then 1.7, then 2. But personally, I still don't like 2-to-1 for myself. It doesn't really matter to me. I don't really care. But I just wanted to really hammer that home because it is very important and it does relate to the algos very significantly. So it is very important. But cool. Are there any more questions on that?
There is someone asking if they could see the results on gold.
Okay, great question. So the way that the back test works is I'm going to stick to NQ here. You can actually customize it for gold or ES or YM or RTY. You just have to go through and change the actual settings in here. Like I said before, these are customizable, right? So if you're trading a different asset, it's going to have a different back test. So I'll actually go to ES just to show you guys the difference. So I'm going to go to ES now with the default settings. So I didn't change any settings. So keep this in mind that ES and NQ don't actually move the same. So you can see the backtest is a lot different. Still an 80% return. The drawdown is a little bit higher from 19 to 32%. The win rate is higher, but the profit factor is just slightly lower, right? NQ has and again, with the default settings, NQ has a cleaner equity curve, which is something that I like to look for, right? A cleaner equity curve right here. It's like very consistent. Okay. So, and if you want, guys, by the way, this works. You can actually put in any instrument into the into the back test. Like you can look at like Euro USD or Tesla or whatever, but it is created for futures. So if you don't trade future, I mean, I'm assuming everyone watching this trades futures, but if you don't trade futures or you want to look at it on something else, honestly, just don't bother. It's made for futures. So I just want to make that clear. But let's get into, I want to show you guys how you can very easily remove obvious low probability days. This is really important. There are very obvious low probability days that I want to tell you guys how to remove. And as of right now, you are going to need to use Excel or Google Sheets or something. It's not really that complicated, but you're just going to see, I'm going to close this. You're going to see exactly how I do it, how I think about removing what days. I'm going to show you guys exactly how this works. So the way that it works right now is you click on this thing. You're going to see, so by the way, my mouse is right over here. So you click on this. You just click download as Excel. And I'm going to open this up now. Let me just open this up. Okay. So for anyone who's intimidated by Excel or is like, oh, forget it, I'm not doing this, just bear with me. It's not that complicated. What TradingView does, which I think is actually really great, is that they allow you to export everything in this back testing area over here, which is really cool because now you can go through and kind of play around with it. The important tab is this list of trades tab right over here. So you guys can see my mouse, I'm wiggling it just so it gets a little bigger. It has everything from this list of trades tab. So the direction, the entry, the exit, literally everything. The only thing that it doesn't have is what weekday it is. So what I'm going to do now is I'm going to click on this. And and obviously, guys, this is all in the explainer videos. If you go to like step 3, you can go right here. Use Excel to find the best weekdays to trade. Step-by-step explanation of exactly what I'm going to do now. So I'm not going to go into super detail on this. Everything is right here if you want to actually see how to do it. But I'm just going to add in the weekdays. So I'm going to type in weekday as the column name. I'm going to do this, and I'm going to do this, right? This is the formula that we need. So this is going to automatically plot the weekdays for me. I'm going to copy paste it all the way down. So now I have all my weekdays. This is super important, obviously, because we want to know what weekdays are high or low probability. The other thing that I like to do, this is like purely aesthetic, but I like to make my losing trades red. So I'm going to do that. So negative numbers are red. I'm going to do this. Okay. Now, what I want to figure out is, are there any weekdays, long or short, that are obvious winners and obvious losers throughout the entire year of 2025? Okay. So I'm just going to insert a pivot table, and if this is scary, just don't worry about it. It's literally 2 seconds and you literally have it. So one thing super important to know about TradingView is that they will duplicate your P&L, and the reason they do that is because they give you the entry and the exit with the times and the prices and everything else. So you just need to remove the duplicates. And the way to do that, not that this is an Excel course, but the way to do that is you're just going to remove the exits. And the way you know you did it correctly is that this number here matches this number here. Super simple. So now we have each weekday broken out by the P&L based on long and short trades. This is perfect. What do we see here? What are the obvious losing days? You look at Thursday. This means that on Thursdays, the net P&L of every single time you went short on a Thursday was minus $4,000. So this is a very obvious bad day to trade, Thursdays short. There is an argument to say, which is my argument, there's no way that I'm trading this. I'm not doing it. The net P&L across all of the trades that it's taken is minus 4K in the entire year of 2025. I'm all set. I'm not going for half-court shots here. I'm not swinging for the fences. I'm not going to cross my fingers and hope that today is going to be different from every other Thursday in the entire year. No thanks. So I'm going to zoom in a little bit more just so this is a little bit bigger. You can see a very big losing day here, Thursday short. Now we have 3 other major losing days. Monday and Wednesday short, and then Tuesday long. So one last piece is that what you're going to see here is Tuesday short have a P&L of minus 480. This is net P&L across the entire year. Personally, I'm actually looking, so right now mine doesn't have this included, but I'm actually going to start to look to add this back in. Why? Because one trade, this is on the trajectory of being a green day. I do this every single month. I just go through, download the data, go back trailing, like the trailing period, so I include the most recent month. And I just do this. It takes me 5 minutes, and I just go and I see, are there any weekdays that are changing? Yeah, Tuesday short used to be like minus 1,500 or something. Now, Tuesday short are getting a lot better. I'm expecting at this point for it to start to be a little bit of a higher probability day, which is going to make me want to add that back in. So there's no science to how this works. This is a little bit more subjective, but it's very simple. You guys just watch me put this Excel together.
Yeah, I think that's a very important thing to understand. You're not just going to put this on your chart and just start making money like crazy. It's still hard work, and whether the hard work is analyzing or the hard work is trading discretionary, it's not a get-rich-quick scheme, for sure.
For sure. Yeah, there's no get-rich-quick scheme. And do you mind just pulling up my screen one more time?
Mm-hmm.
I just want to show you guys what happens when you remove these low probability days, right? So it's Monday short, Tuesday long, Wednesday short, Thursday short. So all shorts except Tuesday and Friday. So Monday short, Wednesday, Thursday, and then what else did I say? Tuesday long, right? So now I'm going to update this report. And what happens is my equity curve looks a lot smoother. Why? Because I'm eliminating my obvious losing days. So my P&L is almost $10,000 higher, right over here. So it goes from 16,000 to 25,000. My drawdown actually is slightly higher, but practically the same, from 19.8 to 21. I don't really care about the 1% difference. It takes 83 trades, which is still a very big sample size for the entire year so far. There's only 250 trading days in the entire year. So there's only 250 days that it could take in total. The win rate is 70 or 76%, and the profit factor is 2.3. So understanding that now we are focused on the high probability days, right? Fridays long and short are great. Monday's long, Wednesday's long, and I'm actually going to leave in Tuesday short. I'm actually going to do this on my own personal algo. But what we're doing now is we're understanding that we're focused on high probability trades, and now that's the ones that we're willing to put our money behind. Guys, one thing is that people get very excited by this, and they will risk 25, 30, 40% of their account on the next trade. I want to make something extremely clear. Steph Curry has a 90% free throw percentage. Are you going to put your net worth on his next free throw? Of course not, because it doesn't mean that he's going to make the next one. It means that over the next season, he's going to make 9 out of 10. You don't want to risk a very big portion of your account on any individual trade. You should not be passing evals in 2 or 3 days, because that means that you're risking too much of your account to pass. This is super important. So now I'm going to go to the list of trades. This is kind of touching on what we were mentioning earlier with the consecutive losers. What I want to show you guys right here is 3 consecutive losers. Now I'm just going to go through and point out all the consecutive losing trades. There's 2. Here's another 2. And that's it, right? Did I miss some? No. So in terms of, this was the 1, and then there was 3. So in terms of consecutive losing trades, I'm pretty sure you'd be pretty thrilled if the most amount of consecutive trades losers that you took in 2025 was 3. So this falls perfectly in line with our win rate chart right here. 3 consecutive losers, 93% chance that happened. It actually happened last week. So understanding the win rate, Going for consistency over these giant home run trades is super important. You can see that these are very small, like what I'll go to the list of trades here actually. What you can see is that the losers are actually almost always going to be bigger than your winners. So minus 1,000 plus 400 plus 900 plus 600. Here's again, minus 1,000 plus 800, minus 1,000, 1,000. So as you can tell, obviously, this is not a one-to-one strategy. Even if we look today, what was the trade today? It's not always going to be the same because it depends on different factors, but you can see today was 0.52. Let's go to a couple days ago. This actually ended up being a loser, but I'll look at what the risk to reward was here. This was over a 1. So there are going to be instances where it fluctuates between 0.5 and 1. But what you're going to notice here is that my profit target is half of my stop loss. So the default settings that we have here are a 0.5 to 1, a less than 1-to-1 risk to reward. Normally, people would like lose their minds about a strategy that has a risk to reward that's less than 1, let alone almost a 0.5 to 1. But let's look at this day here. Or actually, I'll look over here. Sometimes the stop loss doesn't show up. Okay, let's look at this. Let's look right here. This was, I think, early last week. 0.68. So you're going to get roughly between a 0.5 and a 1. And when you're trading this and you see a loser, it doesn't really bother you that much.
Exactly.
You're never going to be, it's never going to be like, oh, I genuinely don't care I took a loser. Like, of course, when you take a loss, like you're not going to be thrilled about it. But when you do take a loss, when you're trading a strategy that you actually know the performance of, that you know that you're confident in, all the emotions go away. And also keep in mind that this is fully automated. So you can fully automate it through the futures desk, obviously, because you guys have ProjectX. We just released ProjectX. But when you take a loss or even 2 or 3 consecutive losers, you still have the peace of mind of, I know the strategy that I'm trading. Mm-hmm. You're not following some guy on YouTube that's telling you that because this high took out this high and the other one didn't take out the low or whatever else, that now I'm going to take this A+ trade. Based on what, right? You guys are risking your money because you are following the trades of other people, when in reality, you don't know what the actual long-term backtest on those strategies are. There's a lot of discretion that goes into it, which is fine. Discretion is totally fine. But when you have the backtest, you have the performance, the drawdown, the win rate, the profit factor, the list of every single trade with the entry time, the exit time, the prices, the P&L, the run-up, the drawdown, everything. There's no more questions. Like there's no hesitation. Like there's no uncertainty anymore. Like you know how the strategy works because you have every single possible thing that you would need. You can go back and you can look at the actual day of what happened. You can look at how the entry looked, how the exit looked, or whatever else. Like for example, this was yesterday actually. This was a super late entry yesterday. This was a very, very late entry typically. Like usually you would have entered a lot earlier. So you can go through and kind of like see there's nothing, there's no hiding anything, there is no mystery. Every single thing that you would have in here is fully based on the data inside of here. So to kind of summarize, well, first of all, I want to ask if anyone has any questions here.
Yeah, so real quick, someone's asking if it only works with NQ. You can use it with any futures product, pretty much.
Yeah. So you can use it with any futures product. You can put any futures contract on here, but you are going to have to change the settings based on the instrument that you pick, right? So that's really important. Like these settings are not going to work specifically with gold or with RTY or with YM. I actually do know that it works well with the DAX. I don't know how many people are international, but the DAX it actually works really well with. But I recommend NQ is just because the default settings work so nicely with NQ that to make your lives easier, look at NQ. Specifically, what I mean is NQ or the micros. It doesn't really matter. Like MNQ or NQ doesn't really matter. But I just want you guys to don't overcomplicate it. This algo takes 1 trade a day maximum.
Yep.
And look at the results. A lot of people are like, can it take more trades? Can it do this? Can you add in an EMA? Can you add in this? I'm like, guys, like what? This is the dream P&L. This is the dream equity curve. Like, why are we even trying to overcomplicate it? Like, what are we doing? Like, if your equity curve looks like this or your returns can outpace this, like, fine, then we can have a conversation about like what to add or what to change. But like, until then, how about we just keep it simple? 1 trade a day. It's very simple. There's really not like, I literally just went through the entire process of like how this thing works, excluding like how the entries work and how the exits work and everything else, because those are in, there's a little bit more boring of the details, but those are all explained right here in the Orb algo. Everything you need right over here, right? The Orb algo, everything you need right over here. You click on this video, it's going to tell you every single thing you need. I'm actually going to update this video probably this week. So it's like a fresh video. But I mean, it's super simple and it works, obviously. And there's no need to overcomplicate it. Trading is not as complicated as people make it seem. I think that the financial industry has a lot of jargon. It's very intimidating, and that's why people kind of get nervous about it. What we're trying to do at Edgeful is bring down that barrier of entry. Whether you want to look at data, whether you want to look at the initial bounce, or whether you want to look at whatever, engulfing candle data or gap fill data or whatever else, you can do that very easily here. So you can very easily see how often it gap fills on NQ. Or when we do algos, fully automated trading, we try to make it as easy as possible. This is the most important thing.
Yep.
Now, it still requires effort, but it is simpler than any alternative.
Yeah, I have to definitely agree with that. I love how on every single page there's either a video or a written description or both. And we love that you guys do that. And we're going to bring that into our 2.0 dashboard, just explaining it as much as possible. The other thing I want to talk about is like how easy you made that Excel process. If you go through the videos, it is really not as complicated as you think. Everything is outlined, and it even goes deeper than this, because I think you could do risk to reward optimization as well, right?
Yep, right here. So you can optimize the max loss. You can optimize the profit targets. So there's like, you can literally optimize everything. And it probably takes like 3 minutes. And realistically, like I could do it in 30 seconds, but like I know what to do. But if you follow along, it can take you like legit 2 or 3 minutes to get to this as someone who's completely brand new. Like actually 2 or 3 minutes. Like I'm not exaggerating. Like you play the video, you have this thing next to you. It's literally the exact same. You just go step by step by step, and that's it. There's like 4 steps that you have to do. And we do it on purpose, honestly. Like I've probably made like 500 videos now, like explainer videos, like even ones that like I've gone through and updated and whatever else. I'm going to update the Orb video. This one too, probably today. I was planning on doing it today. But the idea here is like, it helps. It makes a difference. Like I wouldn't do it for fun. Like if people didn't watch these videos, I wouldn't make them. Like I don't do it for fun. I do it because it's important. And that's really, it's critical.
For sure. Let's get into some questions here.
Sure.
Let us go to a question here. G. Siva said, you can't really say that Thursday is bad for short. You need more data to say that. I think you probably just have 4 or 5 days that you shorted on Thursday. So do you want to talk about what data went into this? Yeah,
so luckily our handy friend Excel is going to be able to tell us. You can double click right over here. And here we have 11 trades. And what you can see here.
I didn't even know you could do that. Interesting.
You can do that. So what you can see here is that out of the 11, 7 of them are losers. And when we have a risk to reward that's less than 1, you can't have that. So you can try, and that's exactly why I said you can take these trades. I personally am not going to. You guys can. I'm not going to do it. There is no right way to do it. That's why they're customizable. That's why we don't give them to you pre-customized, and we give you the ability to do that. But you can see that all the winning trades added up to be less than $3,000, or roughly $3,000, and the losing trades ended up being minus $7,000. I'm not going to trade that. But again, there's no right way to do it. So,
Yep.
Yeah.
Cool. Yeah, definitely makes sense. And you just double clicked on the actual pivot table to get there?
Yeah, you can click on any of the rows, right? So if I just double click on this, now I have my Mondays long, and then now I have all the different days with the dates, everything that you would need, and that's it.
Yeah, I know what I'm doing this evening.
Exactly. Yeah. So
back into that.
Exactly. So you can see even here, and you can see like this will give you a little bit of an. I try to like not go into this stuff. Like this is like definitely more in depth. Like you guys don't have to do this, but you can see here, and you can make sure that it's sorted by, yeah. So you can see that it's been on a pretty solid run recently. So like earlier in the year, it's been on a pretty bad run since from February to June or July. It's been on a pretty bad run. But since July, it's actually been on a pretty solid run. So it's taken 3 losers. Now, granted that this strategy, the losers are always going to be bigger than the winners, but you win more often. So if we see a couple more winners come in here, this weekday is going to start to have a positive outlook, which was going to allow me to say I want to add it back in.
Yeah. And this is really educational for me because I set the algo up. I saw that Tuesdays were really bad. I stopped trading Tuesdays to set it up in my configuration. But now that I'm seeing there's almost a meta process of how to optimize the algo over time. And I'm sort of understanding that from you right now, that this is an ongoing process, you know?
Yeah, for sure. So the same way that you pay your credit card, the same way that you pay your rent, the same way you pay your insurance or your car bill or whatever else, like this is part of your monthly thing. The end of the month, the first comes around, let's download the data from TradingView, let's look at what's working, let's look at what's not, and you can go through and see, okay, actually, there were 4 trades Tuesday short in September, and 3 out of 4 of them were winners, and we had one today, which also happened to be a winner. Maybe we're starting to flip that. We're starting to go in the right direction here.
Yeah.
Right. So that's really like, this is the exact process that I do. I look at this and then I go and I can see if you like, whatever, let's look at Thursdays again. You double click. What have we noticed over the last few Thursdays here? So again, I like to make my losers red. What?
You need a hotkey for that or something. You do that. I
know. I used to actually have it up here, but it's like a whole thing to do it. But so what do we see here? Every trade short on Thursdays from July to September has been a loser. So, I mean, there haven't been that many, but like, I'm not willing to take this trade. Like, I'm just not willing to do it. Like, there's been 2, so 50% of the winners were before May. Then the following winner after that was, actually, let me do this. Okay. So 3 out of the 4 winners were before May. There was 1 winner in July, and then all the other trades have been losers. Like, guys, I mean, I don't really want to I don't really know what else I need to say here to tell you not to trade Thursday short, but like, they've been pretty bad.
Yep. The data speaks for itself here.
Yeah.
I want to ask you, Andre, have you been observing through time that like days will like rotate? Like, for example,
yes. So it's actually funny. When I started the Orb algo, like for my, like personally trading the Orb algo, over a year and a half ago.
Okay.
And the only days that actually that were poor were Mondays, long and short. Long and short Mondays didn't work at all. Every other day was great. So I was like, okay, Mondays I don't trade. Tuesday through Friday, we're golden. And then slowly you start to notice that like things will change, right? So you start to see, for example, something like this. Like let's say that these were green trades, or let's just say like one of these was green. You start to see 4 consecutive losers, then 5 consecutive losers. Now I'm like, okay, I'm going to turn this off until I see something change, right? That's where, for me, I'm going to go and check every month what's going on. What's the update? And Tuesdays are a really, really great example of this. So let me just make sure I'm sorting this properly. Yeah, so like Tuesdays are a really great example of this. we're starting to see a little bit of a flip. And that's something that's important for me to know, because I want to know what are the good and bad days. And like, it's very, very obvious that Thursdays are not ready to be added back. I'm not going to do it personally. And that doesn't mean that you shouldn't do it. Don't listen to me. This is super important, guys. Like I say it all the time. You should not be blindly listening to anyone on the internet about anything.
Including us.
Including us, right? You should never blindly listen to anyone on the internet about anything, ever. What I tell everyone is look at the data. Right here, 61%. Like, yeah, if this was 90%, this would be a lot easier of a sell for me. But it's not. And I don't control what shows up here. So if I told you that, yeah, this thing happens 90% of the time, everyone would be like, oh, I want to know about what that is. But this report right now doesn't have that. And we internally don't control what this does. This is all objective. This is all a matter of fact. This is not my opinion. Nothing in Edgeful is my opinion. Nothing in the algos is my opinion. It is all completely objective, completely data backed, and like arguably in the trading space, one of the only things that is that way. So when I tell you to do this, and it's worth doing this, it is worth it to do this. And it takes, realistically, your first time, it'll take 20, 30 minutes. You'll figure out how this works. You'll play with some of the settings. You'll re-download the thing. You'll do it again. It's really not that hard. It takes a minimal amount of effort. And to be honest, to be totally blunt and transparent with you guys, if you're not willing to do this, you're probably not taking trading seriously enough.
Yeah, right. We have a question from Josh Allen. He said, if we purchase the Edgeful Algo subscription, do we also need to purchase the ProjectX API?
Great question. Unfortunately, yes. Yes, you do. That is an unfortunate part of the cost. But yes, you do. That's the short answer, is yes.
Okay. Is the Edgeful Algo free with the Futures Desk? No, it is not.
It is not.
There is another question. Does the 1-to-2 does the half to 1 risk to reward ratio have a fixed number of ticks? So basically how it works is it's calculated based on the size of the orb. So it's dynamic. Whatever the orb is reflects that.
Yeah, you definitely don't. I mean, I'm not going to say you definitely don't want to, but I would caution anyone to say, I'm going to go for 10 points or 20 points or whatever, because the market dynamic shifts, right? And 20 points now at NQ at 25,000 is very different from 20 points when NQ was at 11,000. So going based off of a point increment doesn't scale over time. So you want to go off of like relative ranges. So the way that this orb strategy works is that it's based on the, like Raj said, the orb size. So the bigger the orb, the further the targets, the smaller the orb, the closer the targets. So it's dynamic.
Yep. Understanding risk to reward is so cool. Yeah, definitely.
Yes, it is.
0.5 to 1 R is cool. It reduces losing streaks and increases win rate. That is good in the long run. Why best traders have 2 to 1 and 45% win rate?
I mean, is that verified? Honestly, where did you get that from? Is my question back to you? Is where did you get that from? How do you know that? That's my thing. And the other thing that I had mentioned earlier is that a 2 to 1 or a 2R, 3R, 4R is not suited for beginners. So if you are 5 years in, then you've probably developed a skill of holding on to your winners, right? Holding on to those bigger moves, holding on to really maximize those winning days. But if it's your first year or you're 6 months in or you're 8 months in, it's pretty unlikely, genuinely, that you're consistently going to be able to hold for a 3R target of like 120 points. Because there are going to be days where it goes up 70 points and it's going to reverse on you and you're going to stop out at break even or stop out for a loss. And the next time it happens, you're going to be up and you're going to be like, I'm going to take my profits here because last time it didn't work. So over time, you develop the calluses, honestly, like the scars of like messing around with your trades. But genuinely, if you're within your first year, you're just not going to do it. It's just like, it's just a general rule. I mean, if you do, that's great. But like a general rule is like, you're probably not going to be able to hold on to your winners.
I think it also depends on the psychology, and that's something we can't really measure cleanly. Like a 0.5 to 1 might be really easy for someone and really difficult for someone to take because they just don't like seeing the red number. So it depends.
Yeah. And it depends on your personality too. So for me, when I start to hold on to a trade for like more than 70 points on NQ, start to get to 75, I start to get, for me personally, like super fidgety. I'm just like, I should close it. You're starting to get greedy. 70 points is like a percentage of the average daily range. Like now you're starting to get whatever, right? So, which is right, either if it's right or wrong, it doesn't matter. But the point is that for me, I don't mind leaving money on the table where some people like cannot even wrap their heads around. Like, I can't believe I didn't capture the whole move.
Mm-hmm.
And what will happen is they'll capture 25 points, take their profit, and they'll run another 60 points. And then now they're trying to like make up for like and trade that rest of the hope for more continuation, give back all their initial profits just because they left 60 points on the table. I don't really care about that. That's my personality. I know other people are different, but like I like consistency. I don't like bigger swings in my P&L. Like I don't have home run days. Mm-hmm. I don't have like 200, 300 point days. I would never do it. It doesn't mean that it's right or wrong. I mean, I would love to have 300 point days, but picking those days is really hard to know which days is today going to be a 300 point day. It's pretty tough to figure that out. So I'd rather be consistent.
Yeah, that's a good answer.
Yeah.
Michelle asked, how far back does the backtesting data go?
So you can go back as far as you want. And there is a video in the Edgeful platform it's in the psychology section about how far back should you look. Everyone has different opinions on this, so you can decide. I think in this case, year to date is fine. I think 6 months is fine as well. There are people that are going to go 5 years back. In my opinion, this is not a fact, that is a mistake. Because 5 years back includes 2 elections, includes a pandemic, includes unprecedented financial stimulus, includes inflation like we haven't seen in 40 years. There's a lot of different market environments that came through over the last 5 years. So the relevant market environment, let's just pretend it's this little sliver here. And the further back you go, the smaller the relevant data becomes of the total sample size. So you want to go back 20 years, it's going to muddle and like completely wash away the relevant information, which is this. Yeah. If you go back 6 months, it's very likely that a large percentage of your window is relevant data that works right now. That's why the default on Edgeful is 6 months.
Yeah, so the way Andre does it is he does smaller slivers of time, but he's updating it every month. You could find something else. Maybe you find that 2 years works for you. It's all about getting down and dirty with the data. Moroccan asked, it's a long only setup. The reason he didn't take certain shorts is because the data spoke to him. You know, if it had said the opposite, he would have done the opposite.
Yeah, I don't care. Long, short, side, I couldn't care less. I'll go short only. I don't care. I know some people don't like to go short. I don't care. If the price is going down, I'll capture the move down. I couldn't care less. Fridays were long and short. Fridays actually short were actually better than Fridays long. I genuinely could not care less about going long or going short, buying calls or buying puts or shorting or whatever it is. I genuinely don't care as long as what I'm doing is backed by data.
Yep. Let's get to one question, and then I want to ask you something real quick. So Moroccan asked, what's your max stop in tick if the orb is maxed out?
So I'm not really sure exactly what you're asking. All the explainers are going to be inside of the Edgeful platform. We also have a private Discord group just for the algo users. So you can actually, you don't have to start from scratch. You can just like there's like a settings channel. So I know someone had asked about gold before, you can just go and see like people have come up with these settings for gold or oil or YM or the DAX or whatever else. You can do that. There is no like simple blanket answer because it completely depends on what asset you're trading and everything else.
You have a lot of options with risk management. So you can select what we just did, which days you want to trade, which days you don't, which days you want to go long, which days you want to go short, or which days you completely don't want to trade. There is the maximum and the minimum orb size,
Yeah,
and then there's also your maximum dollar amount. So you can say, I only want to risk $500.
yeah.
And I really like that. There's multiple ways to manage that.
Yeah, yeah. It's and all of the explainers of like how everything works and like how one changes the other is all in the explainer video. It's like honestly, I think it's like 19, it's like 17 minutes or something, and you can play it on 2x speed, honestly, but it's so important just to understand it at least in the beginning, and then you never have to watch it again. Like
Yeah.
just go through, watch the video, like understand how it works, and that's it. Like it's super easy, and you can automate it after that. So for anyone who's watching that is going to be in meetings or is driving or is with their kids or just like can't follow a strategy properly because you just know that you're your own worst enemy, automate it. Let it just take the trades for you. That's it. And like we've also built in, just so everyone knows, we've also built in like every protection that we could if you manually mess around with your trades.
Yeah,
So
we
if
could
you
get
close
into that for a whole hour. About how you've created that whole system of it doesn't duplicate trades, it doesn't mess with you if you're trading manually for whatever reason. That was probably a big engineering marvel.
yeah, our CTO me and him got on a lot of calls about different situations, different scenarios. What happens if someone adds? What happens if someone cuts their loser early? What if they cut their winner early? What if they add to a winner? What, like every situation, because we know that people are going to play with it. Like it takes a little bit of getting used to trade with an algo, but if you add to a winner and you want to let some run, like we're not going to close your entire position because we only opened 5 contracts and you added another 5. Like we're not going to close 10, right? Like that's not what we opened. Like we only close what we opened. We only the other way around. We open like that's the only way that it works. Like we only mess with like Edgeful only sends the signals based on what it did with the algos. That's it.
Yep. And I just want to say, if you close that trade early, Edgeful is not going to create an opposite position because it knows it's closed. So
Correct.
it's a very intelligent system. And that's the one thing that whatever you want to do with the backtesting data, however you want to trade it, you can be rest assured that it's not going to do anything weird in the technical department. I haven't had at least any glitches or bugs.
Neither. Oh, we've processed, I mean, easily over 100,000 trades. I feel like at this point, there's no way that. I mean, we've had issues here and there, almost always based on contract rollover.
Okay.
So you want to be like, there are certain assets that roll often. Gold is one of them. Contract rollover almost always is the problem. Is like it traded, the user set the alert on the continuous contract. When you do that, TradingView and whatever the platform is, and Trade or ProjectX is going to trade the other one, and that's the only issue that we've seen. It's been that I'm aware of at the moment. Like we haven't had anything that has been like, I got into a position that I shouldn't have got into. That's never happened.
Mm-hmm. Cool.
Yeah.
I want to get into a bird's eye view of all the algos. I know you added a new one recently. Do you want to just like give a brief overview of all of them? We went over the orb.
Yeah.
But, let's just give people a quick visual of all the other algos.
Sure. So I'm just going to share my screen here. And one thing that I want to really emphasize here is that I recommend starting with the orb. This is very, very important. I recommend starting with the orb. I'm going to just touch on like the actual strategies themselves. I'm not going to go through the whole backtest and everything else with these. But what I want to show you guys is some of the, so like for example, the IB, let's look at today. Great. So this is the IB algo. It's pretty much like a break and retest strategy, the way that it works. Break out of the IB, come back to a certain percentage of the IB range. You have 2 take profits, TP1 and TP2. This is based on our IB setup. It's a combination of the IB report, the IB by retracement, the IB by levels. So you can see here, it touches here the IB low, retraces back into your entry level, comes back down. This is today, actually. And you can see TP1 and TP2 were both hit for a really nice, so this is a 60-point move on TP1 and a 100-point move on TP2. So as you can tell, the risk to reward on this is super high, which means that the win rate is very low. I will actually say that I'm not going to go over the back test here right now, just because it's like a whole thing. You need to go to a different, it actually works better on ES than it does on NQ, so it's a little bit different. This is given the default settings. Now the other one is the engulfing candles. This actually works a lot better on a higher time frame, actually, just because, oh, I need to change this stop loss to be, I'll just make it really big so you can see how this works. Okay, so the way that this one works, oh, another important piece is that these will all close your position. So I know a lot of, I mean, do you guys allow swing trading?
No, we don't.
Perfect. We will close the trades automatically for you if your profit target or your stop loss doesn't get hit, so you don't hold a position overnight. So you can see this is Friday, last Friday. Profit target and stop loss didn't get hit. We close EOD, end of day close, regardless of if it's in profit or in your drawdown, we're closing that trade. But what you can see here is, let's look at this trade here. Engulfing candle here, you enter at the close, and now you're targeting a percentage of the engulfing candle size. So you can see here, here's like another good example. This is just so it doesn't happen immediately. And now you can actually see the risk to reward. But you can see here, entered, almost hit your profit target, then you got stopped out. There's another entry here, then you hit your profit target. And this is the way that the engulfing candles works. Now
So the
let's look at the
engulfing
gap.
candle has multiple trades per day.
This is the only one that has multiple trades in a day. Every single other one has only one trade. The IB has 2 profit targets, but it's only 1 trade per day.
Yeah.
So you can see here, entry, profit target, another one, entry, profit target. And you can see this is like, if you go to ES, and actually this one in the explainer video has a little bit of guidance actually on how to change some of the settings. So if you go here to the engulfing candle video, this one actually has a little bit of guidance just because it's actually one of the easier ones to optimize, but I just figured it'd make everyone's life easier if I gave them a little bit of guidance. But you can see right over here is a loser, and then following with actually this was a profitable trade, but ended with an EOD close. And then finally the gap fill. This is actually the first algo that I ever built. Let's remove that. Okay, so I need to widen. So again, guys, I'm changing the max loss here because you can't trade NQ with a $100 stop loss. Let's look at today. What is this blue line here? This is the previous session's closing price. We enter, profit target gets hit, 57 points here. This is today. You can see, let's look at some other ones. So it is based on the gap size here. So like there aren't too many trades that have been executing. I'm just gonna like bump this up just so we can have some examples. So it doesn't mean that this is like the proper way to do it, but I'm just showing you guys some of these here. Okay, so here's another example. Right over here, you ended up, it didn't actually reach your profit target because the profit target on this day was 215 points, but it did get 113 points on NQ. Let's look at some other ones. This was last week. Enter here. This was a 113-point move. So you guys can see very obviously the risk reward here is very different. This is why I tell you guys to focus on the OR. So let's look again. Here's a loser. Price came down. Retrace back up. There's your losing trade. Today, it was a winner of 56 points today. So this is how it works. You can actually, something that if you are interested in looking at the gap fill, what day is it today? Tuesday. What I actually would recommend, this is a little bit of a secret tip exclusive to this stream, is you can actually send your gap fill target beyond the gap fill. This is really how you're going to maximize, how you're going to squeeze the most juice out of these winning trades. So you can see today, hit your profit target, but price continued a lot further down. So for example, on Tuesday, let's say I make it 150%. Now this thing is going to come down, right? So now I just added another 20, it's like another 25 points to my target, slightly more. So you can send it in excess of the gap fill, right? So even, I mean, this is extreme and probably is not going to work over the back test, but you can go 250%. Now this is how you're going to capture a much bigger move. And all that means is that the gap has to fill and continue. No reversal after the gap fills. So that's what you're looking for in that case.
Good stuff.
We
have 2 really good questions by Silent J, if you want to get to them now.
Sure. Yeah, let's do it.
The first one is, hey Andre, great product. Currently you have 4 algos. What are the plans for additional? Also, Orb is the most popular. Does the data show more profitable versus others?
Great question. So we are going to have 2 variations of the Orb being released soon. So it's going to be one that moves your stop into break even or into profit. So it's going to be one variation. The other variation is going to be having 2 profit targets. So right now the Orb only has 1 profit target. So it pretty much let's look at today actually. Here you can see, I'm just going to do this, right? So here today, you left a lot of money on the table, right? Let me just do that. You left a lot of money on the table, right? So you can set one order to be reasonable, and you can set one order to be super far out. Now, the back test is going to determine whether you're going to want to do that or not, but that's what the purpose of that one is for. The other one is for moving your stop into break even. So we are going to have variations come out for each of these. The Orb, most popular, does the data show profitable? So the reason that I say that the Orb is the one to start with is because it's the most consistent, like I explained with this. What I don't want to happen is for you guys to come in and say, you know what, I've never traded with an algo before. I'm going to try to trade with an algo. You try something. Let's just say that the gap fill, the settings that you pick have a 35% win rate. The risk to reward is massive, right? The risk to reward on the gap fill is huge. But you take 6 losers in a row or even 8 losers in a row, and you're like, well, this strategy sucks. But that's not actually the case. It doesn't suck. It's actually it's based on this. Like, this is the math. Like, it doesn't matter what. Like, this is just a win rate chart. This has nothing to do with trading. It's like if you flip a coin, there's a percentage of times you can take consecutive losers. But the reason I say to start with the Orb is because it's the most consistent. It's just like the probability of going into deep drawdown is the lowest, which is why I say that.
Yeah, for sure.
Yeah.
He also said, I'm assuming if for whatever reason you close the trade manually, would you need to disable the algo for that trade?
No, no, you would not need to touch anything. This is what we built. This is like what we do differently from literally every other algo on the market, is that you don't need to, like, okay, let's use today as an example. Today is Tuesday. I'm gonna have a very an extreme example, but let's look. Let's make a really extreme example here for a second. Tuesday, I'm gonna do like 300%, just so we can get this profit target down here. Okay, so I hope you guys can see this. I know it's a little bit dark, but let's just see if I can. Okay, perfect. So you can see this now very clearly. This was a 140-point target. Let's say here, so this is a short trade. So theoretically, your position is now -1, right? You're a short 1. When you're long 1, your position is +1. So now you're -1. You're a short 1 contract of NQ. Let's say here, you buy and close your position. So now your position is 0, right? You're flat. Now what's going to happen here is your take profit signal is going to come through, which is +1, which would theoretically make you flat if you were short. But what we do is we check, is the current position -1 or is it 0? If it's 0, ignore the signal. So you don't have to turn off the algo. You don't have to remember anything. You can literally just like set it up and like leave it for the month. revisit it when you want to reoptimize. But we're not going to put you into a long position here. So here you're short, you close the trade here, right? Now you're flat. The +1 order comes in, we're not going to make you get long now. That would be wrong, right? That would be we're entering you into a new random position. We're not going to do that. So we say, ignore the position, nothing happens in your account. The signal comes from TradingView, but Edgeful is going to ignore that, and we're not going to pass it to ProjectX to actually execute that trade. So this is actually really, really important. And the other thing is, let's say over here you add to your winner. So now you're +1, you're -1. Now let's say you're -2. Now you have 2 contracts that you're short. When price gets here, we're not going to close 2 contracts. We're only going to close 1 contract because we only opened 1 contract. So that's how it works. And there's, by the way, up here in the FAQ, you're going to have all the scenarios. What if I close my position early? Here's a long example. Here's a short example. What if I add to my position? Here's an example here. There's another example here. It's super simple. It's just in bullets. We do this on purpose so you guys can go through and understand how it works. But yeah.
Cool.
Yeah.
Let's see if we have any other questions. Someone said I'm a bit late. What time frame is the orb?
So this is on the 5-minute chart. It's a 15-minute orb, but again, it's fully customizable.
Yep, every single thing is customizable. The time frame and also the size of the orb. So you could use it not even for a 15-minute. You can change that.
You can change it to a 5-minute. You can change it to a 30-minute. You can change it to a whatever you want.
Yep, good stuff. Moroccan said you can't run a 1 to 2 to 1. A half to 1 risk to reward with a 2 to 1 at the same time because the equity curves cancel each other out.
That's actually not. It's not true. It depends on the win rate for both of them. Yeah, that is not technically correct.
Seems like there would be more data.
I don't have all the information to determine that.
Okay, cool. Looks like that is it for questions. We're going to give you guys a minute or two if you want to get your last second questions in. Moroccan said, you should be careful when you interpret the data, but I can see value in automated setup and customer-driven customizability. Absolutely.
For sure. Again, we always encourage you, paper trade it first. Don't rush to pass evals. Don't try to make money overnight. This is like a long-term consistent game. We don't want you guys we will never say that this is a holy grail. We'll always tell you to trust the data and put yourself behind the data. Like I said before, when it comes to Steph Curry and his free throw percentage, 90+% free throw percentage, but it doesn't mean that you're going to put your net worth on his next free throw, right? Because we don't know what's going to happen on his next free throw. We know that over the course of a season, he's going to make 9 out of 10, right? So I'll never say that you guys should be risking your full accounts or hey, this is something that's going to happen. This is going to be awesome. You should buy right now and you should whatever. We would never do that. That's not how we operate.
For sure. And that's another question that I can think of that someone would have is, if this Edgeful Algo works so well, why don't we as a firm just start running it? And the answer is because it's not that easy. You do have to kind of get deep into the data and figure out settings and always be optimizing. And that's why we want you as the trader to come in and trade, essentially figure out settings that work and come use it on our platform, use it with a live brokerage account. And now that we have ProjectX integration with these algos, I'm so happy that our traders are going to have that opportunity, honestly.
Yeah, and I do run it, just so you guys know. I do use it every single day. I've actually used it for over 1.5 years now, so that's super important. I recommend everyone use it. It's one of the best ways to eliminate your emotions from trading. If you find that you're your own worst enemy, then this is really going to be the thing that you want to lean on as you start to develop your discretionary trading.
Yep. And Andre isn't really selling you a product here. He's selling you a process and the tools to go along with, the product. So
exactly.
Yeah, thank you so much for coming on.
Of course.
Really, really appreciate it. Always fun chatting with you, man.
Absolutely. I hope we do it again soon.
Yeah, do you just want to real quick go over how people can get started if they are trading with us?
So in terms of
The
the
algo.
algos, in terms of Edgeful,
Right, the algo, yeah.
so the only thing that you guys have to do is just on this top bar inside of Edgeful is just click on the red icon. Your page is going to look different, but pretty much the way that I would recommend getting started is clicking on this. There's explainer videos here. The setup explainers are like how to get access to the algos. It's obviously super important to like actually get them into your trading view. There's a few things in here that I recommend you guys do. There's a private Discord so you can actually discuss with the other people like what's going on. The orb is where I want you guys to start and not the other ones because again, it's the most consistent. And then you can skip the IB, the gap fill, and the engulfing candles algo. And the Excel explainers are what you're going to use to optimize. So these right here. And then like I mentioned before, we have the mindset explainers. So how to think about win rate and profit factor. How far should I backtest and position sizing? These are going to be really important videos too. I highly recommend starting with the orb video and the Excel explainers to start. And then once you are happy with the backtest, then you'd go through and automate it from here. And that's going to be where you can select ProjectX and everything else. And that's where you're going to go through and do that process. But you can reach out to our support whenever you want, right over here. If you have any questions about actually automating it through ProjectX, you can do that too.
Awesome.
Yeah.
Thank you so much, man.
All right.
We'll
Have
see
a
you in
great
the
one.
future, hopefully soon.
Hopefully soon. All right.
Take
Thanks,
care.
guys.
Bye, guys.